Let's kick off this explainer. It's June 12, 2026, and the crypto market is completely battling it out against some massive macroeconomic and geopolitical forces right now. If you think of today's market action like a dynamic tournament arc, we've got Bitcoin as our main protagonist, trying to break through heavy resistance, facing down these giant macro bosses, and dealing with some absolute wildcards thrown into the mix. We are actually starting off today with a huge beta-driven relief rally. This push has bumped the total global crypto market cap up over 1% to a truly staggering $2.18 trillion. Seriously, that is a massive injection of capital reacting in real time to global events, and it's giving the whole asset class this much-needed burst of energy right when the charts were starting to look a little shaky.
So here's our tournament bracket for today. We'll hit 1, the global relief rally, 2, geopolitics and the Fed, 3, the SpaceX tokenization frenzy, 4, institutional ETF tug-of-war, and finally 5, the altcoin battlegrounds. All right, let's get right into it.
Section 1, the global relief rally. Let's check in on broader market sentiment.
Check out the sheer contrast we're dealing with today. On one hand, long-term sentiment is basically trapped in extreme fear with a pretty bleak score of 12. But fighting right against that dread, Bitcoin is actually staging this sharp, aggressive technical rebound back above $63,000. It's essentially reclaiming its psychological floor as those immediate inflation fears kind of take a backseat for a second.
Now, the ultimate question hanging over all of this action today is simply this. Does this relief bounce actually have the structural momentum to shatter overhead resistance, or are we literally just looking at a temporary short squeeze? I mean, over $54 million in bearish short positions were just liquidated, which absolutely fueled this upward spike. But, surviving in this market, yeah, that requires a lot more than just squeezing out the shorts.
Okay, Section 2, Geopolitics and the Fed. Time to face the macro bosses actively manipulating today's price action.
We're looking at a geopolitical tug-of-war that's actively steering global liquidity right now. On one side, you have President Trump signaling progress toward a comprehensive peace deal with Iran. That immediately sparked a relief rally because it eased fears about energy supply chain shocks and potential closures in the Strait of Hormuz. But literally right across the screen, Iran's swift denial that any final agreement had been reached immediately tempered that initial optimism. We're watching risk assets bounce tick by tick to these headlines.
Adding a bit of relief on the home front, the core CPI print came in softer than expected at 4.9%. And why this matters for us is pretty straightforward. Lower core inflation drastically cuts down the market's fear of aggressive continued tightening by the Federal Reserve. It basically gives risk-on assets a quick moment to breathe.
But here is the ultimate boss that's trapping the market right now. The CME Fed Watch tool is showing a 99% mathematical certainty that the Fed is just going to hold interest rates steady at their June meeting. So, while a pause does stop the bleeding, it effectively sentences crypto to a prolonged consolidation phase. We are looking at a long summer of expensive liquidity, meaning those explosive breakouts are going to be incredibly tough to sustain.
Moving on to Section 3, the SpaceX tokenization frenzy. This is a massive wildcard actively draining capital today.
The historic Nasdaq debut of SpaceX, which entered the arena with a mind-blowing $1.77 trillion valuation, has triggered this wildly complex capital rotation. We are seeing traditional investors literally selling off their broader tech stocks just to fund their SpaceX allocations. But what's really fascinating for our market is how this massive retail demand is rotating straight on-chain.
And honestly, this brilliantly illustrates the intense retail demand for blockchain-based assets right now. Just look at this spread. SpaceX-linked perpetual contracts trading on-chain are sitting at a massive 22% premium. We're talking $165, compared to the $135 institutional IPO price. It perfectly shows the raw power of decentralized markets front-running traditional finance. But it also means capital is actively being siphoned away from standard crypto majors as people chase this shiny new tokenized asset.
All right, Section 4, the institutional ETF tug-of-war. This is proving to be a real double-edged sword for the market right now.
On the bullish front, the absolute giants are still building. BlackRock is actively pushing forward with brand new product filings, expanding institutional access to Bitcoin with their Premium Income ETF right before the pivotal FOMC meeting. It really shows the long-term conviction coming from Wall Street's biggest players.
However, the brutal reality of the current market is right here in the data. Despite those new filings, existing spot ETFs are literally bleeding out. We saw over $15 million leave spot Ethereum ETFs, extending a 3-day losing streak.
And for Bitcoin, BlackRock's IBIT and Fidelity's GBTC saw combined outflows exceeding $236 million just yesterday. It's the institutional tug-of-war in real time. They are building for the future, but pulling cash right off the table in the present.
Section 5. Altcoin Battlegrounds. Let's see how specific assets are surviving in their individual arenas.
To really understand what's happening to Binance Coin or BNB today, we need to quickly grasp the concept of a liquidation wall. Think of this like a heavy, reinforced shield in our tournament arc. It's basically a dense concentration of leveraged trading positions. When an asset's price approaches this wall, all that heavy leverage makes it extremely difficult to push higher, acting like a magnetic barrier that just rejects the price right back down.
So the crucial point for BNB right now is exactly $628. After bouncing back from its recent sell-off, BNB is staring down a massive liquidation wall right at this price point. Analysts are warning that if buyers can't summon the momentum to break through this leverage cluster, the path of least resistance is a rejection straight back down toward the $500 accumulation range.
Looking at the contrasting fates of some other major altcoins, the divergence is honestly pretty striking. XRP is showing incredible, massive relative strength, surging nearly 3%, completely against the grain of the broader market. Conversely, Ethereum remains deeply vulnerable, sitting precariously at $1,652 under the heavy pressure of those ETF outflows we just talked about, with a very real technical risk of falling back to its $1,500 support level.
Now, what's really interesting about this XRP strength is the structural catalyst behind it. Japan's SBI Shinsei Bank, operating in a sector holding roughly $8.6 trillion in deposits, is literally allowing customers to directly convert their deposit interest into XRP. This isn't just speculative trading, guys. This is the creation of a highly predictable, automated, recurring source of spot demand out in the real world.
So as you wrap up this explainer, you really have to ask yourself the ultimate question. With the Federal Reserve locked into a high-rate pause, and institutional ETFs actively bleeding capital, can this beta-driven geopolitical relief rally actually evolve into a sustained structural breakout? Or are we destined to just fight in this sideways consolidation bracket all summer long? Take these insights, watch those key resistance levels, and we'll see how this plays out.